What's going on, guys? Welcome back to Stocks by the Numbers. Today is Saturday, I know, but I wanted to do a quick update video. Also, like a how'd I do list review, because I noticed that I actually skipped BABA by accident. My apologies if you guys were looking for the BABA video. And in the Discord, I threw in some extra chat channels. Now there's a special request channel, so if you guys want me to specifically look at something that you're looking at, or watching, or owning, obviously, you drop it in that channel and I'll throw it up on the board and I'll get to it as soon as I can. But the next company in line here that someone did request is Alibaba Group, ticker symbol BABA, listed here on the New York Stock Exchange. Now, as we're seeing here, these are Friday's closes yesterday. Stock closed $84.69, up 22 cents, little over 1/4% on the day here. We look down here at the bottom and we see last time we looked at the stock, first of all, this is exactly when I made the video here, August 18th. You can see stock was about $90 here when I made the video. And I did mention that there were a lot of negative headlines coming out surrounding China, and that, stepping into the ADRs and a lot of these Chinese companies and stocks, I personally wouldn't have advised to do so. However, obviously, this is a brand name company in the space. We looked at the revenue that was just growing hand over fist year over year. So, again, regardless of how we may feel about the region or, any type of political news that may be coming out of Asia or China specifically, it really doesn't matter. Because, like I always say, when it comes to stocks, sometimes you do have to pay attention to, the politosphere and see what's going on over there. However, on the flip side, like I always say, you have to follow the money. You have to follow the revenue. And even coming down here, just quickly looking at the numbers, we can see BABA beat on the EPS side for the last 4 quarters in a row. And again, annually, we looked at this last time, going from 17 to 21, we can see touch below 38 billion, up to 50, north of 70, north of 100. And for 2021, coming in a touch below $133 billion in revenue. And even though, yes, the profit margin has taken a hit over the last several years, it was healthy for, at least 4 or 5 years in a row, and now has pulled back to about 7.25%, but still profitable. And if we switch over here quarterly, we can see that the company rebounded on their profit margin. Q2 was about minus 10% almost, and then they come back in Q3 with a nice chunk of revenue there, almost 35 billion, profit margins around 19%. So, the company is still doing good business. And again, you have to follow the revenue. 133 billion for the year. Market cap is now sitting at 221 billion. So they're trading like a little less than 2 times yearly revenue for 21 anyway. Looking about the same, maybe a couple of billion more for 2022. So that's why you could say the company is basically trading a little under 2 times yearly revenue, which again, in the private sector, it's usually about 2.5 times yearly revenue for the value of the business. And in the public sector, you could pump that up a little bit, maybe 3.5, 4 times. So you could technically say that this company is undervalued if you use those metrics. But again, we have a PE sitting here at 49, and it did come down a little bit, but, still a little bit high. But again, overall, as we see here, this is when I made the video, and then the quarter right after, slight miss there on the revenue side, still comes in above profitability estimations. And then obviously this last quarter, the company really brought in some good numbers here, 35.9 billion, beating by about $250 million on the revenue side, and coming in with almost a 15% surprise there on the profitability side. So as we're seeing here, a couple of the potential negatives that we focused on last time may be kind of, that might have laid the groundwork, so to speak, and now we're kind of beginning to move along and beginning to roll back into the profitability, which I know was a big concern. But as we see here, August 18th, stock was around 90 bucks. And overall, again, I said I wouldn't have touched it. However, we did have some technicals lining up. We did have the potential for a double bottom that I pointed out, and I said that we could climb back up into the low hundreds, and in the short term it may be nice, but overall, I wasn't really, I didn't really have high conviction on the buy here for Alibaba. And what we're seeing here is, just a couple of days after I made the video, we have a jump up, and as we look at the top of the screen here on the top left, again, the O, the H, the L, the C, that is the open, the high, the low, the close for the day. And what we're seeing here, the high, 104.85. So in the short term, if you did see the double bottom, or it was just overall a high conviction trade for you, feeling that Alibaba was undervalued, and you took a position there inside of that next week or so, as we see, August 26th, roughly 8 days after I made the video, obviously you made a nice little profit, so congratulations. However, it bounced off of that level of a touch below 105 and then went into free fall, hitting new 52-week lows of 58.01. So even though it was short-lived and it happened not really in the long term, but just within, about 3 months after I made the video, again, I am going to chalk that up as a win, I have to say, because I did say if at the time the 52-week low was 73.08 or something like that, maybe around there. Don't quote me, but I did say that the stock had the potential to not only retest those lows, but probably hit new ones. And I said that if it can pull back to even like 70 even instead of 73, or potentially drop into the 60s, that would be ideal, and then the company would be tremendously undervalued on paper, and then that's when I would step in and I would accumulate shares. So, I'm not going to be extremely cocky and say that, everything I said was accurate. Obviously, I said that we can pull back maybe to the mid-60s, and as we see, the stock hit a new low of 58.01. So yes, for the record, I did call the sell-off correctly. However, once I saw it break like that 70 mark and hit new lows, if I had the liquidity and I wanted to take a position, that is most likely when I would have bought the stock. So obviously I would have, suffered like a 10-12% pullback immediately after buying shares. And, obviously it wouldn't have looked perfect. However, that's where it bounced. And as we see, basically ran back up here to this new trend line here that I drew out. And as we see here, top of our screen, 121.30. So the stock more than doubled within this time frame, hitting these lows here. It looks like the end of October going into the end of January. So, if you had the liquidity or you took a new position down here towards these new lows, obviously you immediately made returns hand over fist and more than doubled your money. So, understandable if you're still pretty high on Alibaba, even though we see here it did have to pull back again. The low, as we see, 79.48. So it came back below 80, and then we see it kind of bounced around these fibs and then jumped up to the next fib of about 105 and has since pulled back here. Now, I'm going to back out because I just wanted to show you guys exactly how it moved from the exact date that I made the video. Okay, so from here to here is how Alibaba moved. Again, went up a little bit in the short term, like I said, was possible. And then we hit these new lows, which I did pretty much say it would. And then you had the massive rally and has since been bouncing around. Okay, so that's basically the how'd I do. Let's review. Again, the quarter's earnings came in well, little light on the revenue side, and then the last quarter was just a great beat. So, I understand if they wanted to pull it back again, as we see, this was this was March, as we see. So we're going into February and then going into March, right? So the markets had a lot of volatility during March. We see a lot of stocks pulled back and sold off within those like 2-3 weeks during March. So understandable as to why even coming out after a good quarter, the stock, basically had to pull back with the rest of the market, but then immediately jumping from sub 80 back up to 105. So, again, the numbers were strong. So the stock technically should be in an uptrend regardless of the PE that we looked at of about 49. But backing this up here, you see, these from when I made the video, these were the trend lines that I drew basically since a little after that earnings report. And as we see here, the stock is now beginning to climb. And when I drew the top and bottom trend lines here coming from that new 52-week low, as we see, we're forming a longer-term rising wedge. And in my opinion, I drew out some projection arrows here. And I do feel like now, as we see here, I'll zoom in a little bit for you guys. As we see here, this is what happened yesterday, right? This little candle here. Now, technically, when it has the little wick on the top and the bottom like that with the slight little body, that technically could be viewed as undetermined as to whether it's going to turn and bounce and rally now, or it will potentially like drop and retest this trend line before it bounces back up again. But overall, as we see here, looking at the longer term, it has just pulled back to this bottom trend line. It jumped up here to the fib of 84.14. If we look at the candle, you could look at the open at the high, 84.18, right? So it opened above that fib level, looking strong, came down to, it says 83.87, and then bounced back up, hit a high of a little over 85, but then closed there at 84.69 above that fib. So technically it is bullish. That's why I kind of drew out this projection here. I think it's going to come up here to about like this 98.5 mark, 98.60. And then it may pull back here. However, next quarter earnings coming in May 18th. So I do have a feeling the EPS might be a little high, but the revenue is only 30.4 billion. So I have a feeling that this company may come in with a beat on the top and bottom. And I am not saying that I would personally do an earnings play here on Alibaba. I just think it might be a little volatile and a little unpredictable. So I'm not saying that I would do an earnings play. However, I'm saying you may have a pullback and a rejection here off of this 98.5 after they rally it up into earnings. But then I do feel that the numbers may be decent and they may break above that trend line there and get back to this fib that it was here back at the end of March of roughly 105. And then we may see a potential retesting and even break and could even pull back down to roughly this 98.5 level. However, I think they're going to take it to the next resistance level, which is looking basically where this candle closed after rejecting off of the top trend line, which is looking like, I don't know, yeah, like 120.5 or something. Where did this close? High 120, yeah, 120.57, right? I'll go back to that. See at the high, the C, it says 120.57. So that's where it closed, and that's where I think the stock will get back to. But again, chances are on the technical side, it will bounce off of this bottom trend line and, probably run up a little bit into earnings. However, these earnings are going to predict if this prediction is accurate, right? Because if these numbers come in a little below estimates, then the stock will probably reject this level after it ran up going into earnings. And even though it will slowly climb over time, it will most likely stay and ride this bottom trend line. And again, this apex, as we see here, is looks like March of 2024, right? So you have almost 12 months to potentially ride this wave. And even if we go to the middle of this apex here, as we see, we're looking at 171.68, right? So north of 170, the stock is here at 84.69. So, willing, if this quarter and potentially the next quarter are an absolutely dismal and the company comes in basically in line or above estimates, you will most likely ride this wedge, and you could have the potential to double your assets here inside of the next 11 or 12 months. But I did want to draw out the wedge for you guys because if you are long-term shareholders and you did recently add here on these lows, you just keep this in mind here going into after the bull drops in 2024, because the stock could have a massive correction, and while it's climbing here in the 150s and 160s, it could break and pull all the way back to like 120 and potentially 105. So as we know, it is a volatile stock and it does seem politically driven. However, the numbers look strong. So when you are looking to play a company like this, you have to keep an eye on the financials. And also, I'll zoom in here and I put these levels because, again, this was the high where it closed here again, bouncing off this top trend line as of recently. So this is just a recent trend line. However, here, as we see here, roughly this 98.50, 98.60 mark, we can see a lot of action taking place inside of these circles that I drew out for you guys, right? Look at the resistance and the close right there on that candle. It bounced off the high there on this candle and then pulled back and rejected. Support on this candle, resistance there. Look at all the resistance and support. Look at that happening right here at this level. Even going back, look, it ran up from these levels and then pulled back right back to the level. Look at the close right there at that mark, and then it gapped up, right? Look at all these tiny candles And support and resistance, look at that, just stopped dead in its tracks right there and then pulled back and rejected, and then obviously fought to break up and pulled back and retested immediately at the mark before breaking up and pulling back again. So this is going to be our main mark here. So that's why I like to look at all these points and look at all these patterns over the long term. Where am I? Over the long term, because again, even looking at the stock, yeah, they were trading, in 2018, 2019, and now pulling all the way forward to 2022. That information is now useful and could show you the support levels of a stock, potentially how low it could go here, how high it can go. So that's why you really have to do your due diligence, especially when it comes to technical analysis, because you need to know every support level, every pivot point, every resistance level. You need to look at the fibs. You have to keep an eye on the volume here to make sure, the breakout and the tech pattern is supported here. And, that's why when I talk about long-term investing, obviously the technicals are important and you want the best price entry. However, the fundamentals are key. So you could simplify it a little for yourself just looking at the numbers. But again, we're dealing with a volatile ADR stock here with Alibaba. But sitting here at 84.69, again, I have my 50, my 200-day moving average. I have my Bollinger Bands, and you can see the stock was bouncing around off the mid-Bollinger Bands. And now we have the 50-day moving average here on the daily at 91.03 and the 200-day at 90.61. So they're kind of diverging onto each other here. And last time I did that, obviously the stock was much higher above these moving averages, so it didn't make much difference. However, you can see how it bounced and tried to resist off of these moving averages and fight back to get to them. So the fact that they're both kind of diverging here in the low 90s, and now it looks like, the stock has been climbing for the last couple of days. Looks like the MACD is potentially curling. The RSI was down at, 31, 32, and has since risen up to 37 3/4. So, in my opinion, that's why, again, the long term we bounced off this bottom trend line. That's why I feel that we're going to rise now and at least at minimum get back to these low 90s here and even potentially touch this mid-Bollinger Band of 93.78. Going over to the weekly, we can see the RSI has been pulling back. However, we could potentially say that we do have a symmetrical triangle forming, and based on the numbers, again, the PE is high. However, the overall valuation, in my eyes, may be considered undervalued. So if this is a symmetrical triangle forming, in my opinion, it may break out. And again, look at the 50-day moving average on the weekly, 92.83, right? So that's what I'm saying. It has to break those daily moving averages of 90.60 and 91.30 or whatever it was, and then it'll climb up here and probably touch this moving average of 92.83 and potentially even the mid-Bollinger Band of 96.83, right? So in my opinion, it'll get back to those 90s. Now, if the market does have a massive sell-off, they could retest it back down here to the low 70s, but I really don't think they're going to break that 58 mark that we saw here and make new lows. So if you like it up here at 85 and we think it's going to 95, let's say in the short term, and it pulls back to 75, hey, if you have the liquidity, obviously, like I always say, if you like it at 85, you're going to love it at 75. But, it does look like the MACD is actually slipping here on the weekly. But again, the last couple of days, the stock has been looking strong, and even on the technical side, it looks pretty nice bouncing off that long-term trend line. So that's why I feel like all of this may potentially turn around. The RSI may get bumped back up to, it's at 44 and a quarter here on the weekly, probably get bumped back up to north of 50 here inside of the next week or so. But, I'm basically going to leave it there. And Alibaba, a lot of stuff going on, and I hope that some of this analysis kind of helped you guys out. But yeah, I'll leave it there. Actually, let's look at the numbers real quick before I let you guys go. Let's go over to the financials here. And again, we see the rise in revenue and income. However, the PE and the price to sales looks like it kind of just pulled back down to earth. The PE, again, back in 2019 was sub 24, right? Now we're north of double that now. It's north of 49, the PE. So, certain metrics do make the stock look overvalued. However, look at the revenue they're bringing in. So technically, in my opinion, it's undervalued. The last 4 years in a row coming in above estimates on the revenue side, missing only slightly here on the EPS side. One of the last 4 years, not quarters. My apologies. But yeah, again, look at the cash this company holding on hand. Even with the pullback there from 20 into 21, the company is still showing over $35 billion in cash. The debt is pretty high, but again, the assets, as we see here, are heavily outweighing the liabilities. The company is was pretty profitable, even minus the last couple of quarters here with the profit margin pullback. So, basically they do seem to look healthy and they do seem to look strong. We're looking at about 267 billion in assets and about 96 billion in liabilities, right? So almost about a 2-to-1 ratio. Nothing too crazy. But again, just looking over the last couple of quarters, we can see, look, the assets just slightly pulling back here. As we see, these are the lowest the assets have been going back for the last several quarters here. And the liabilities, they did have a pullback here to sub 90 billion, but again, just kind of bounced back up to 95 billion. So, not much really going on here. The debt kind of remaining flat overall, I would say. However, going back, looking at these quarters here, look at the book value was, 55, 56 and change. It has since pulled back to 54 going into 22 and sub 51. Now it had a bounce back up to 54.26. So, not really a red flag there in my opinion. And we recently looked at, I forgot one of the last stocks I looked at, but I know that it was trading like 13 times book or something. I don't remember what I was looking at, but as we see here, book value 54 and a quarter, stocks at 84.69. So not really trading at a crazy multiple here. Again, the cash flow, very positive here from operating activities and investing and financing have been falling down. However, again, you can't knock what the company is doing. Maintaining this $30+ billion in revenue. The cost of goods, we could say, have kind of been bouncing around, but relatively flat. Look at the jump in profit here that they see just in this quarter alone. We're looking here at Q3. But, overall, I do like the company. I know there is a lot of crap going on, but the PE is a little high, but this is one of the lowest ratios to cash flow it's been trading at. Basically, the second lowest it's been trading to sales looking back for the last several quarters. So that's why I'm saying we could hit that trend line and we could have a bounce here. And, a lot of these numbers were pulling back here. I know the return on assets, equity, and invested capital have been struggling and bouncing around. However, look at the gross margin percentage, was down to 30% from the mid-high 30s, and they climbed it back up to the 35 range, even hitting almost 37.25% now. The operating margin, again, pulled back to single digits and has since climbed up to north of 12, now back north of 15%. And the EBITDA we've seen has risen for the last couple of quarters here, was back down to slightly sub 10 and up to almost 17%, now north of 20%. And the net margin percentage, which was negative about a quarter or two ago, minus 10%, is now sitting here at almost 19%. So the company is a little volatile with their reports. However, kind of heading in the right direction as of late. The asset turnover has been pulling back slightly, sitting at 0.48. Looks like the median average here is about 0.51. But again, nothing really to write home about, because on paper, looking at the balance sheet, the company does look pretty healthy. And again, coming in above estimates, slightly missing here multiple times here on the revenue side. However, just slight misses. And again, still maintaining like that $30 billion level. So, and then we switch over here annually, though, and we can see, yes, there may be a couple of rocky quarters. However, over the years, the company consistently comes in above estimates on the revenue side. And again, really earlier on, they may have been struggling, but since 2017, I'd say if we didn't have that problem in 2020, this company would have beat on the EPS side for the last 5 years in a row. So, a decent company with Alibaba. Again, anything can happen. I could be completely wrong. I could be completely right. However, I just gave some projections throughout these long-term trend lines here, forming this rising wedge potentially, and of course showing you some resistance and support levels. Whatever you do with this information is entirely your own prerogative. I just hope it works out for you in some way, shape, or form if you do take a position in Alibaba. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply, just like everyone on YouTube says. Excuse me, I'm talking myself out of breath here. Just like everyone on YouTube says. If you like the video, give it a thumbs up. Helps out the algorithm. Helps me get more eyes on the channel. If you appreciate the content, please push the subscribe button. That's our handshake. That's all I want, is to watch the subscriber count grow. I'm not asking you guys for monthly fees, or I'm not holding classes here that I'm charging you for. All I ask, handshake agreement. I'll review anything you want me to do. Just push the subscribe button. We help each other out. But moving forward, like I always say, I understand that markets are rocky and they're volatile and they're uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. I want to thank you guys for stopping by, and I wish you well moving forward. Take it easy.